Hello guys, hope you're well. We're going to do the SMI today. I'm actually going to be dropping an order in pretty soon because this is showing signs that it's almost ready. Now let me put my levels on, which is here. I'm going to look to start getting into this short. Now why? We can see a lovely move down here and it's coming onto here, but I want it to sort of retrace itself on this hourly candle here. Now just while it's having a bit of a think about it, let me show you where this came from. I've already done a full breakdown for the guys in the squad, which is here, and it's for Maxwell. It's not a product that I trade. Now what I've also put in, what you can see, it's predominantly going to be selling this thing. Okay, I take my main direction from this, the double D, the dominant direction, and what I want to try and do is align it with these two. Okay, if they do, brilliant. And what it's telling me is it's a low TP, so I'm looking for about 11 pips. Now the ATR on this isn't too bad. But what you'll see when you're looking at the SMI Swiss index, the product that you want to be kind of looking at is the euro. So I want to see what the euro is up to against the rest of the world. Well, it's pretty darn flat, but that's the bit that kind of interests me. It hasn't changed position at all. It has lost a little ground, but it didn't lose position, so it's holding. Well, if that's holding, that means there could be a potential bounce on the horizon. If there's a bounce in the euro going up, it'll naturally push the SMI down. So with that said, that's what we're going to do. Now, I think that's where it originally came from. He was checking his levels, wasn't quite sure where it was. And I said I would mark it up for him. All right, so that's what we're doing. So happy days, happy days. So I genuinely tried. Right, it's coming into breaking level now. So we're going to drop our first order in. Now, it's not too bad a position. So the order will pretty much trigger almost straight away. Okay, so just going to edge that in. Right, there we are. I'll move this down into 15 minutes just so I can see what's going on. There it is there, and we're going to set in, it said 11 pips. So that's about here. So we're just looking to brush the bottoms of these. Now I'm doing this just as an ad hoc trade, simply for the guys. Now let me analyze this a little bit further for you. If you come out to the daily, you'll see it's been on some good Murray runs, super runs. Now, came down, there it is, it's gone into market now, pushed up, broke, turned, pushed up again and turned. Now there's a couple of things you can do here. I want to see if these turning points were key elements. Well, what I would do is I would get an extension and I'd look at a drive in the same direction as where I was going. So first of all, I would look back here in the chart, which is there, and sure enough, key turning point, stall, lines in with this key level, came down, and then it turned again at the 161. So yes, the structure of the market was roughly correct. Is this showing signs that it'll push back down? Well, this is something that I was kind of showing the guys in depth, but again, from there, top of the market, which is roughly around this area, back to where it started, and it's had a good go at a turning point coming back down again. So yes, structure of the market was correct, and it is good to push down. Now we're looking for quick snaps. If you pull this further in, you'll now see this particular move here, which it's now pulling against. Now I want to drill in a little bit further to the hourly, and you can see that it's pushing down. It's going into target right now, But if I was to drop this back out to the 4 and I was to put what's called entry exits in, just put a fib on all the way up onto there, where we are, we're holding under the 50, which tells me that this will run down short. So that is your key point of attraction, which is there. That's your pivot. Just put that in blue. And then you're running it down into the next bit. So that's there. I should have actually had that as a dotted line because these are fibs. Let me just amend that. Dotted line. Just get hold of that one. No. That's not what I want. That one is a dotted line. There we are. Because I like dotted lines so I can recognize what a fib is. So there's my trading arena based on fibs. You can also see how the market reacts. There's your 23. Brilliant support and resistance here. Also lining up with a key level. Comes down, stalls, finds good levels here. Comes down into the 50. Again, found it here. Pushed up, failed to go to that. Held on this level. Pushed back down into here. Which means logically it's coming back to here eventually. But if I go to my sheet, which tells me what to trade and how to trade. Now, this particular sheet, the part of it, the engine that actually tells you the trade is available to the guys if you're a Rogue member. And what it'll do once it's filled in, it'll actually tell you whether you're selling or buying this thing. Now, it's telling you it's a low TP because it's actually against the bigger trend. If you're going against the bigger trend, you've got to be careful. So it works out, or the way I've set mine out is, it'll tell me roughly how many pips I want to be targeting per wave. Well, it's 11. So for this particular push down, I'm looking for about 11 pips, which is here. Take this down into 5 minutes, just so that I can see what's going on. There it is there. Nice and easy. So now, from like a harsh market that looked a bit bitty, that's nice easy. There's your entry point. We've got in just underneath it, come down, and we can get out anywhere from 11 onwards. And that would be an ultimate target if I was going to be holding it, but I'm not. I'm just taking it to here because I want to get in, I want to get out. And it's just turned 9 o'clock, so hopefully this will be fine for the next hour. And then I'll move on to my next trade, which will be cable. I've already done gold this morning on the small accounts for the guys. That was done and completed earlier on. Same principle of trade. So if I pull this into shot, you'll see done 20 quid this morning. Doesn't seem much, but the principles of the fibs are exactly the same. We're now at 646 on this. If I pull in the sheet for those who've been following the small account, and if you do want to follow it, there is a link to BlackBull down in the description, as there is for 5%ers and Darwin X. We took 200 quid and we built it up. Now, I've done this twice this year. It started in January. I took a good over £1,000 out last month, restarted it with 200 quid. We've got it back to the baseline and it's now drawn money out. This week it'll be 73.07 on Friday, and we've already this month had 144 out of it, which is put in the BlackBull wallet. And you can see there where it's taken the wages out each month. And if I put it on the summary, we can see how much we've grown this since it restarted in May. Now, if you follow the series, you'll see that start in January, came up to May. Somebody said it was a fluke, annoyed the shit out of me because people can be a bit daft at times. Said, okay, well, I'll draw the money out and I'll start it again just to show it's not a fluke. Built it up to 500, which was here. As soon as it hits 500 as a baseline, harvest the profit. We started harvesting the profits and it's paid me 177. So I'm nearly at sort of house money now, which I will be on Friday. I'll have drawn out the 200 investment, so everything now is just pure profit. I am happy, and that's what I'm going to do. Every time it hits 250 quid in the wallet, I'm going to take it out and I'm going to put it in my Vanguard, which you've seen me build the Vanguard up, and that has got thousands in it. And that's what all these trading things is about. It's just about little and often and building up your trades. Now, there's that trade there. Now, this particular trade, I set up and showed the guys what it is, how it was marked, and the key levels that I'm looking at way before I've come to camera to do the trade. I think that's the fairest way. I'll tell you what I'm doing before I do it. I don't do retrospective. So let's run this down, see if it gets to 60 quid shortly, and then I'll come back and I'll tell you a bit more about the trade. Okay guys, decided to take the money because it's stalling a little bit. My push down hit the target. I actually targeted more than I required. Should have been 11 ticks. If I left it at 11 ticks, it would have smashed into target and would have been done. However, sod's law, it's stalling. Now if we look at the makeup here, it pushed back into this level and it seems to be doing it again, which is why I've killed it. If this slams down, brilliant, but there's a possibility it's going to pull back up. Now, if that's the case, I'd have lost the profit. So just make certain, I've closed my tickets off, but it's still done 124 quid. I'm happy with that for 50 minutes, and that's what this is all about. I've sacrificed a couple of ticks, but I'm safe and I'm happy with what I have. Now, if I was greedy, I'd be hanging on. If I hang on, well, what if it does turn around? I give all that profit back. Pointless. I can always go back to market if I wish. And how do I do that? Well, 10 o'clock, I just revalue what's going on. If I think it's still going to push down for the next hour, well, then I'll just hold on to it and away we go. Actually, in this case, I was probably wrong to have killed that trade because it's now just pushed into where it was, which would have been target. So maybe it was itchy trigger fingers, I don't know. But it's Monday morning. I don't like trading Monday morning. It's also a market I don't trade very often. So I don't actually have a big feel of the market. I don't really know how well it's going to spike. If it's cable, I'd have probably left it. If it was DAX, I'd have definitely left it. But with this one, could have gone either way. But I did target it into the right area. I staged it back when it pulled against itself. Now I'll do that 5 times if I need to. And I got more than I initially started with, which is what this is all about. Now, if I was to let this run off the first position, which is where I kind of think, it'd have made me about 60 quid. However, I got another position in and I made a lot more than 60 quid. So really, it's worked out well. So there you go. That was for you, James Maxwell. Little salute to you. Hope all's well down your part of the world, and keep doing your requests and I'll keep doing them. So as always guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.